What's going on, guys? Brian's here. Today is Wednesday, March 23rd, 2022, and the market just recently closed. We'll be touching on the subject matter of relative weakness in the markets, and we'll be reviewing NVDA here. But before we actually jump to NVDA, let's just take a look at the SPY for a second here, which is the S&P 500, and let's look at the overall market. Let's turn off all of my levels here, and there's something that as the market has been rallying since last week, a lot of shorts coming and they end up exhausting themselves trying to pick the top. And there's something that's important that you want to do if you're looking for a short trade. You want to wait for what's referred to as backside weakness. And this is the first sign of weakness in which we had. So in other words, don't keep trying to short the market saying just because it's gone up 7% in a week, it has to come back down. Remember, the market does not have to come back down. It can just keep going up. It's what it was created to do. It will have minor pullbacks. It will have minor retracements. But for the most part, it's going to want to go up because that's the natural order of things. So as we look at the SPY, we can see there's been this massive rally, and there's a lot of people already starting to think that the reward versus risk being long is no longer worth it up here. So that's one change in logic as well as change in sentiments. It's too risky to be buying new long trades. So what happens is traders start looking for opportunities to short. The next question you ask yourself is, well, what do I short or what do I look for? And that's what this video is for. As we can see already yesterday, NVIDIA closed. It had 2 days in which it already put in a couple wicks out up top. And these are referred to as, I guess, the spinning tops, or they're not necessarily dojis, but this is already starting to show that the momentum has shifted from NVIDIA, or it has at least slowed down. So coming into today, we were already aware of that. And when I mean we, I mean a couple members in the Quant Trading App Discord, where I'm the head trader at, as well as the lead developer on the algorithm. But this video is not necessarily about Quant Trading App. I just want to walk you guys through some clean price action, as well as how you can approach the market and have a thought process before the market actually opens, because this trade idea was formulated pre-market. So as we look at NVIDIA's daily chart, again, we see this right here, and we can see that it closed down. If we jump over to the intraday charts, and what we're looking at is the 15-minute time frame for the SPY, the NASDAQ, the SMH, which is the semiconductor ETF, and then NVIDIA. As we take a look at this right here, we can see yesterday, which was Tuesday in the market, there was a very strong momentum day to the upside. The same thing that happened with tech. It was very strong, which is the NASDAQ. However, as we look at the semiconductor ETF yesterday, it had a rally in the morning, but then it broke down later in the day, and it actually struggled to remain above VWAP. Whereas, don't pay attention to this line right here. We're just talking about VWAP, which is yesterday's level, which would be right here. We can see the SPY stayed above VWAP, whereas the semiconductor struggled around it. And then we take a look at tech, and tech actually was very bullish yesterday. However, when we look at NVIDIA, we can see that NVIDIA also struggled towards the end of the day. So this is what we refer to as a little bit of backside weakness. This is front side strength as NVIDIA is rallying, and then you look for signs of weakness as it's pulling back. If it can't get back up to where it's come from, that's the first sign of weakness. And there's a member in Quant Trading App that actually pointed this out yesterday as he was thinking about taking this short right here. Now let's just make this full screen for a second, and there's something to I'm going to pause there for a second and talk about this, because if a move is actually going in the direction in which you think it is, there's usually going to be multiple entries, which means you don't necessarily need to cry over missing the perfect entry, because it's very difficult to do as a trader, especially if you're new. So in other words, one can make the argument that yes, yesterday this was the perfect entry to get short because it was a nice retracements right here. But as we can see, the markets gave another entry here today in NVIDIA. So even if you were shorting the equity, and let's just say you were looking to be net short NVIDIA yesterday at 266, and you missed this and then it gaps down, you don't have to chase this. Just set an alert in the area in which you would like to get short, because chances are the sellers that were here are not done selling their positions, and the market usually comes back up to an area of high liquidity, and you end up getting a second entry. So first lesson, I guess, to take away from this is just be mindful of the fact that if you miss the trade one day, don't forget about it the next day. Remain focused. Come up with the idea as you do your analysis pre-market or from the previous day. Set an alert. This is something I spoke to a trader about 6 or 7 months ago, and I told him that was usually missing trades. I told him, hey, if you miss a trade on one day, just ask yourself, where would be the ideal place to get filled again? Chances are the market's going, or the stock is going to come back to where you want to get filled, and you'll get your second opportunity more times than not. And if you don't get the exact entry in which you want, that's where you usually look for some sort of a retracement. Again, in this case, we got relatively lucky. Let's pull this back here and look at the grid. Now, I also want to pull up, let's take this off here and let's look at Apple. And scroll down, and we can see Apple showed relative strength yesterday, continued to keep pushing up yesterday into today. And we're going to use Apple as a proxy for the rest of the tech stocks, but just take my word on it instead of making this video too long. A lot of the other stocks in the market pertaining to the mega caps had a lot of strength. And I guess let me just show Tesla, since that one was also very strong. We can see that right here. This was the strength from Tesla yesterday. So a lot of strength into the power hour, whereas the semiconductors were struggling. So that's the second note in which you're going to want to take note of whenever you're looking for a short trade. Compare what's weak relative to the indexes. If you have multiple monitors, that really helps, is you can put, you can create a grid and you can have like 12 tickers up. You can always have the SPY and the NASDAQ up, and then look at your 10 favorite tickers next to these two. If you can fit 12 stocks on a chart, on a couple monitors at the same time, that's really beneficial because it allows you to monitor 10 stocks, and then you can have 2 grids up where you're just looking at the broader markets right here, and then just take a look at where it shouldn't be, is something that I like to ask myself. So in other words, NVIDIA should not be down here if the rest of the market is all the way back up here. As we can see, the NASDAQ was pretty much putting in a double or triple top. We can see that so was the SPY, was essentially forming some sort of ascending triangle right here, and then we can see Tesla was just completely breaking out. Now, if we compare NVIDIA to one of its peers, which would be AMD, which is another popular semiconductor, we can see that AMD also had relative weakness yesterday, as it was strong in the morning and then it sold off, and it created a little bit of this bear flag into lunchtime and power hour. So the confirmation was there in terms of the weakness between these two relative to the SPY. Now, as we come into today, and let's jump to the intraday time frame, and let's actually take a look at the volume profile. As you guys know, I love looking at. One thing I had up was this was yesterday's point of control. So yesterday's point of control is today's virgin point of control, unless it was touched at the open. And then as we jump over to this here with the candlesticks, if you guys aren't aware of what this is, I have a playlist in the on the channel, as well as I'll leave a link in the description down below so you guys can get up to speed on terms of how to read a volume profile as well as points of controls. But as we can see right here, this is our point of control, and this is an area that we can interpret or say would presumably be supply in this zone here. Now, if I jump over to the quant trading app Discord, we can just see at 9:18 a.m. most of the focus was on Tesla from pre-market, because that's, if you saw the previous video in which I put out, it was just on looking for gamma squeezes, and Tesla was a candidate for a gamma squeeze, which is what happened today. So a couple of us actually swung Tesla overnight. Now, aside from that, this was the trader that actually pointed out NVIDIA's weakness yesterday, or the 50% retracement in which it put in. And the 50% retracement in which I'm referring to, let me just make this a full screen, was just this one right here. So as it sold off and it bounced back up, this was a 50% retracement. If you guys want to see it, I'll just put it on the chart just to confirm that right here so you guys can see. And if you're not sure how to read the fibs, this is it selling off. This is it bouncing up back up about 50%. This is it bouncing up 60% before it sold off on the next leg down. So let's just remove this for a second and come here. So that's why I was just tagging him, and I was letting him know from pre-market there was nice follow through on the video from what would have been a good short overnight. I'm looking for a retracement back up to the 266 level. 266 is this level right here, and that's because of this confluence of supply right here, and we can see the rejections, or around yesterday's POC for a short entry, as relative weakness in semis is confirmed. So we had confirmation of the weakness on this gap down here today. So the levels in which I'm interested in would be 266 or yesterday's virgin point of control. You guys see that? So I'll put a gray area around this zone right here. So from here all the way down to 266, if we just draw this right there, you can see how we end up getting the perfect place to look for a short trade for today. Now, another thing that added some confluence, that if you guys have seen any of my previous videos, you know that I'm a huge proponent or advocate of the 2-day anchored VWAP. VWAP is something that's important for day traders. If you use the 2-day anchored VWAP, there's tremendous edge here. So this is essentially saying we can sort of think of this as a more dynamic point of control from yesterday. This is a static point of control because it's not accounting for the price action that's occurring during the current session of the day, but all this price and volume is now being aggregated in this 2-day point of control right here. And that's one way in which I like to interpret it. I've done a video on this also, which I'll leave in the description down below. I've actually done a couple videos on this because, again, this is something that I love looking at. Now, the confluence of, we have the 2-day anchor VWAP, we have this zone right here. On top of that, let's take a look at another Fibonacci right here. If this was the week's high and then we pull this down to today's low, as NVDA came back, it's in this same area right here, which is this 50% to the 61% retracement. Perfectly lines up right here, and it ends up creating a great area to look for a short trade. The rejection again ended up being confirmed once price sold off. If we remove this fibs, and let's actually remove this zone, if you ask yourself, if you're still unsure and you had the alert here and the alert goes off at 266 and you're looking for a short entry, the next best thing you can do if you're very hesitant as a trader is you can then wait for another retracement. As we can see, it's sold off again and then it bounced back up, thus giving you another entry to get short. So anybody that got short here, valid. Any person that got short here is very valid. And even if you got short anywhere in this vicinity, there's nothing wrong with this, because essentially we're targeting 255 on the video, which is max pain for this Friday. But that's not necessarily the subject matter for this video. Let's remove this. I'm currently in a 255 calendar spread because that's the way in which I like to open up most of my short trades. If you're unaware of calendar spreads, it's my favorite way against too short, and I've also done a few videos on that. So hopefully piecing together these different ingredients for what you want to look for whenever you're looking for a short trade, this can provide some sort of context. If we take a look at the options here, what we're looking at is the 250 put for next week Friday. We can see within this vicinity here was going for about 350 to 360, and now it's trading at almost $6 by market's close. So getting filled anywhere in this vicinity is a nice way to control your risk, because you're buying it when no one's necessarily looking. Momentum traders will buy it as it's already selling off, probably getting it around 440, 460, but you see you can get in a little bit earlier and then buy close. This is a 56% return here if you're just a swing trade. If you're a day trader and not comfortable swinging the options. So about $200 per contract on traded. And out of curiosity, if we were to look at something like the let's say the 250 put maybe, and I'm choosing out the money puts intentionally to show puts that are not expensive. Down here, these are great trades for small account sizes. So we're looking at an 85 cents option within this vicinity here. So assuming you got filled anywhere in this time frame, we're talking about 90 cents, 85 cents, and then at the close, $2.11. So 130% return, or $120 made, or assuming you sold out anywhere here. Either way, it's at least a 75% return on the trade, and you're not necessarily risking that much because of the identification as well as the preparation and being patient. That's the ingredients that this takes, and I'm a very patient trader. I have no problem waiting 2-3 hours for price to come to exactly where I want it to get filled. I'm not a momentum-based trader, and I don't have much FOMO. And that's what makes it easy to wait. Anybody that scalped puts here in the morning, I imagine this was pretty scary. This is a 15-minute time frame, but look at this wick right here. If you jumped in at the market opening and you tried to get puts, it was pretty volatile, as I can imagine. I like to avoid that and just wait till later in the day for a nice easy entry, as it was premeditated. Guys, if you like this video, leave a comment down below, like the video, share it, and you can find information pertaining to the Quant Trading App Discord in the description down below. Catch you guys in the next one. Thanks for watching.